Hey everyone, welcome back to the SOXL Challenge channel. Negative 47%, yes, that's right, negative 47% in just 2 weeks. SOXL plunged from a peak of $70 on July 11, 2024, to $37 today at one point. It's the evening of July 25, 2024. Is the decline over? Nobody knows. At this point, SOXL could rebound back to its peak, or it could further drop to $30, $20, or even $6, the low it hit back on October 13, 2022. However, I think there's a higher probability that SOXL will rise in the remainder of 2024. First, let's talk technicals. On the Finviz website, SOXL hit the bottom of the SMA 200 in this blue line, then it rebounded. Let's look at this Yahoo chart. Similar to what we saw in April 2024 when SOXL lost about 47%, it was able to rebound when it hit the EMA 200, the blue line. This time today, SOXL rebounded when it touched the SMA 200, the green line. We have the exact same negative 47% in both April and July. What would happen if it goes below the SMA 200? Still, nobody knows. It can go back up as it did in November 2023, when SOXL was below SMA 200 for almost a month before moving above SMA 200. In contrast, in January 2022, when SOXL went below SMA 200, it started a long decline for the next 10 months. You can also see this death cross in March 2022. Now, let's get into our SOXL update. Today, SOXL is priced around $40, down significantly from last month's $55. During the month of July, it even went up to $70 on July 11, 2024. Let's review the news explaining why SOXL plunged. In a Bloomberg article from yesterday, titled, "Leveraged Tech Bets Get Crushed After Drawing in Billions," it was reported that buying the dip backfired on investors as the slide deepened. In recent weeks, leveraged technology-focused ETFs, including SOXL, have faced significant losses after attracting substantial inflows. Specifically, SOXL plummeted by 15% on July 24. This decline occurred despite the fund receiving a record $2.3 billion in inflows just last week. The broader market downturn, particularly affecting AI-related stocks, has impacted leverage ETFs that amplify daily returns based on the underlying assets' movements. These leveraged products can lead to substantial gains during market upswings but also result in significant losses during downturns. Investors should be cautious when using such leveraged instruments, as their risk profile becomes evident during volatile market conditions. I am one of those investors who bought the dip, as described in this Bloomberg article. Another article highlights, here's why chip stocks are falling. Shares of several chip makers declined over the past 2 days due to two key factors. Geopolitical tensions and trade restrictions have contributed to the recent volatility in chip stocks. Another article states, chip stocks have gotten hammered. Why the damage might be overdone. Additionally, an article mentions, semiconductor stocks may see more volatility. There might be more volatility in the semiconductor sector, given how crowded those positions have been in Asia and globally. Then, this morning we received some good news. 2 articles from the New York Times provided optimism. The first, titled, "U.S. Economic Growth Accelerates, Outpacing Forecasts," reported that the U.S. economy grew at a robust 2.8% annualized pace during the second quarter of 2024. This growth exceeded expectations, as economists had anticipated a 2.1% rise following a 1.4% increase in the first quarter. Key contributors to this growth included strong consumer spending, private inventory investment, and non-residential fixed investment. The second article, 2025 could be a great time to be president, economically speaking, highlights trends already underway that could contribute to a positive economic outlook over the next few years. These trends include a significant burst of infrastructure spending, which is expected to ramp up in 2025 and 2026. Portfolio performance. This July, I invested about $4,000, bringing my total investment to over $7,600. Usually, I invest only $500 a month in SOXL. The investment of $4,000 means that I invested 8 months worth of SOXL in July. So, for the next 7 months, depending on price movements, I may buy much less SOXL if the price goes up. If the price goes down, I will continue to buy more SOXL. Since our last update, I bought SOXL as follows. On July 12th, I bought 8 shares at $60. On July 18th, I bought 2 shares at $53. On July 23rd, I bought 28 shares at $51. On July 24th, I bought 11 shares at $48, 11 shares at $46, and 12 shares at $44. On July 25th, I bought 11 shares at $38. Currently, my average cost per share is around $44. The downturn in July has erased the gains accumulated over the past 7 months, resulting in a current total return of -10% and an approximate loss of about $700. To recap, our challenge is guided by 4 key rules: monthly investment, committing to invest around $500 in SOXL each month for 30+ years; enhanced dollar cost averaging, EDCA, strategy, investing more during market lows and less during highs; sell before crashes, selling if a major crash seems imminent, with plans to buy the dip later; no margin trading, avoiding borrowing money for trading. With this strategy, I'm optimistic about our journey ahead. As we navigate the ups and downs of SOXL and the broader market, I'll keep you updated with regular insights and updates. That wraps up our SOXL update for July 2024. Remember, this channel is for entertainment, and I'm not a financial advisor. I'm here to share my strategy, but it's crucial to tailor your investments to your own financial goals. If you found this video helpful, hit that like button, subscribe, and drop your questions or thoughts in the comments. Happy investing, and see you next month.